You do not want to learn about IRMAA the hard way, because if you learn about it the hard way, it's probably 2 years too late before you can do anything about it. What IRMAA is, during retirement, you're getting Medicare benefits and you're paying for them, being deducted. Medicare premiums are deducted from your Social Security benefits. And that your Medicare premiums are not a set amount. The higher your income is, the higher Medicare premiums are. So that's what IRMAA is. And many people find out about it when it's already happened. So it's really good to plan about it ahead of time, because it's not a bad thing to pay IRMAA. I mean, if you have a lot of income, you're doing great, you're doing a good time. But if you make a mistake and you cash out an IRA and you didn't realize you're going to pay all this extra premiums in IRMAA, and you find out 2 years later when you get a letter from Social Security saying, hey, here's your new Medicare premiums, that's pretty shocking and really makes people pretty upset. There's a 2-year gap because how the Social Security Administration finds out about what your income is, they use a number from your tax return called modified adjusted gross income. And by the time that information gets reported to the Social Security Administration, it's probably going to be maybe April, May, let's say it's 2026 now. It takes that long for adjustments and changes to kick in. So now you're looking at 2027 before the Medicare premiums get adjusted. It's just because it takes that much time. Clients get this dreaded letter at the beginning of the year saying the Medicare premiums are going to be X amount, and they'll go, what happened? What changed this? And it tells them in the letter because of their income. And they usually bring it into their tax preparer and what is this? What happened? How come I'm paying more premiums? And that's how a lot of people find out about it. A really good strategy to help, because people, in retirement, it's not about your income. And all these things with the IRS and government, Medicare premiums, Obamacare, all these things have to do with the income that's shown on your tax return, right? But income and cash flow are two different things. So what I've really focused a lot of my practice on for people who don't want to pay high Medicare premiums and don't want to pay for their health insurance is how to get your cash flow high and your taxable income low. Simple as that. If you have any questions about the things we spoke about today, give me a call and let's sit down for a complimentary fit meeting.